What's up, traders? Um, Today I'm going to be sharing with us another strategy, another candlestick pattern, candlestick pattern that occurs everywhere, every day. And I promise you guys, if you learn this, you will know when to take position in the forex market without you wasting time or without you having doubt on how you can, quickly take a position. People will often ask, when is the right time to take position? As in people call it entry, to place your entry. When is the right time for you to place your entry? I tell you, the ability for you to know setup, for you to have your own personalized strategy, for you to have the ability to know the anatomy of each candle, what each candle represents, what is actually going on once you see a candlestick formation. So if you are able to identify a setup, I'm telling you that is your entry. That is the right time for you to place your entry. Don't try to force a setup. Don't guess. If it is not clear, just leave it. If you are not sure what you are doing, just leave it. Allow it to go. There will always be opportunity as far as forex trading is concerned. Every day opportunity shows itself in the forex market. Even when there is a consolidation period, like I told or I mentioned in one of my videos, in a higher time frame, if a consolidation is going on, if you scale down to the lower time frame, you can still trade. All you just need to do, you trade from the bounce. You trade from the supply zone, you trade from the demand zone. Don't try to enter in between at the middle. So that is it. So the strategy, the candlestick formation that will really boost our trading is what we call higher higher close candle in terms of a bullish trend. Higher high, higher close candle. A higher high, a higher close candle. And the other one in the opposite direction, a lower low, a lower close candle. I'll repeat it again. Lower low, lower close candle is very, very important. I will show you in a moment. But I want us to master what the name is called. It's called in a bullish trend, is called a higher high, higher close candle. What does that mean? I will tell you. Let me show you guys. Now, let's assume, for example, this is a bullish, okay, let me just come this way so that I can show you guys something what I meant by a higher high, higher close candle. Like here, for example, if you look at this, you will see that this is a bullish trend. Okay, let me increase this a little so that we can see it very well. I can use another color. Let me use this. Okay, you can see this is a bullish trend up to this point, right? Now, there's a setup here, but finally, when you want to enter the market, you will see a candle. This is a bullish candle, followed by another bullish candle. Now, let me show us this. This is a bullish candle, followed by another bullish candle. Now, this candle, you can see where my cursor is. You can see there is a little gap. So this candle, by the time it closes, the other one will gap up a little. Then it will start printing. By the time it closes, I'm telling you, just place your entry. This is your entry here. This is your entry. I'm just showing you guys this. I'm just showing you guys this so that you will know. It will be very clear. Now, if I take you guys here to this very place, you can see it clearly here. This and this, you can see, or rather this. This is a bullish candle. It closes. This is another bullish candle, followed by another bullish candle. So we call it a higher high, higher high, higher closed candle in a bullish trend. This is a bullish candle, followed by another bullish candle. As soon as it closes, place your entry, right? Because this trend was bearish before, it got to this point, it printed this candle. You can call it indecision candle if you are correct. After this candle has closed, you will see another candle, the same candle, bullish candle, printing. As soon as it closes, we call it next bar market. As soon as the next bar market closes, place your entry. Then your stop loss will be some pips below this one. That's all. Some few pips below the structure. That is how it is. Then for for bearish trend, like you can see, this is bearish, right? Bearish up to this point. Now, this guy was price action was going up, being was bearish, was bullish. It got to this point, then it was higher to this point, then there was a rejection. That's why you see this weak. We call it weak. There's a rejection. That is to tell you that sellers are in the market. Even before this one closed, you can see there was a small rejection, but it opened, it closed bullish, opens in push higher, then sellers took over. Then after this candle closes, you see the next candle. This is lower low, lower closed candle. This is lower candle. This is followed by another lower candle. Lower low, lower closed candle. As soon as this guy closes, place your entry. Even some people don't even wait. As soon as they see the gap in between, this thing is very significant. By the time you see this gap here, just as soon as this one close, place your entry. This is where you see experienced people. They are very crazy. They can This is where they double or even triple their lot sizes. It depends your your hunger for risk. Everybody are not the same, and if you can handle it psychologically, because price action will mess with your psychology, and if you are not careful, nobody wants anything to happen to him or her. So you have to be very careful, handle yourself very well, because by the time you place a trade, and if your hunger for your appetite for risk is high, you might just say, okay, this is 100%, and you just increase or triple your lot size, and by the time you see some rejection like this, you go crazy. But yes, that is how price action behave. Why all this thing? Because of these other blocks here. These are reactionary points that you should expect price to react to. Yes, it's like that. Even though it's going to break below this place, it must react. You can see the way it reacted, but because this guy could not hold it, it broke below. Yeah, because the trend is meant to change. It has changed to tell you that it's coming down. It has changed to break this low. It's supposed to break this structure lower, so he here could not hold it. This support level could not hold. At the end of the day, it broke through it. Yeah, so by the time you increase your lot size because of the appetite for risk, and you see all this kind of drawdown, you go crazy. So guys, let's know what we are doing, and we should not just you know mm, just increase our lot sizes anyhow. I think consistency is the key. If your lot size, you have a particular range, just put it there. No matter the opportunity that show itself, just maintain it. Any trade you are taking, you should know your lot size. Don't go above it. Just keep it consistent. You know, that is how it works. Just take it easy. And one thing about trading is that by the time you mastered structure, I'm telling you, you will be relaxed. For you to do analysis, it will not even take you up to 5 minutes. You open your chart, you already know. By the time you do your top down analysis, you already know the direction, the directional bias. You already know where the price action will go next. And another thing is, let me talk to you traders. Even if you are new or you are already trading, you should know that no matter the training you get, no matter the idea people sell to you, no matter the amount you pay to learn this skill set, I'm telling you, you will still be the one to sit down and master your own, and improvise, and you'll be the one to still master what works for you. You'll be the one to create that thing that you feel that works for you. That is how trading is. You cannot be trading my own strategy, or you cannot be trading any other person's strategy. You must train your eyes to see structure, to know that there is difference between a minor structure and the overall big structure. You must know. Once you open your chart, you should know. You should see all those pure eyes, point of interest, all those reactionary points where price will get to, it will react. Why? Because there are other blocks there, the OBs, the way other people call it. There are pure eyes there. Where price, why are all those things? Because those are levels, just like here, you see when it got here, there was a reaction. Even though at the end of the day it broke through it, when it got here, it reacted and it retested this thing again. You can see this level. So that let me just, you see, these are reactionary points. This one here, you see, when he got here, he reacted. When he got here, he went back as he went up again to test this place again. If you drag this thing back, then you see this is the same level. So all these places, like here now, you see reactionary point. All these places, price will always reference to all those points. Like if this guy now, if he's coming down, by the time he gets to this point, this level here, expect a reaction. You should expect a reaction. This place. So when you see this kind of reaction, you don't need to be frightened. But if he hold eventually, is going to turn. There will be a change of trend, even though it comes back up to retest this guy, then it will now come down again. But there will be some reactions here. You cannot, there's no way that reaction will not happen. Price cannot just come and drop flush below this place. There will always a reactionary point here. This point, this point, then the next one here is here. And that is how to even know. Don't worry, I will do a video on that. That is how to even know when to take your profit. When to take your profit. Because if you place your entry, the next thing you should do is to set your stop loss. Don't worry, if you don't really know all those, because there is what we call ATR, the average true range. All those things is how all those things are what you put together to set your to place your entry and to place the know where to put your stop loss and your target. If you're somebody that sits on the chart daily, if this is your job, your daily job, you don't need to set your target. Only need place your entry, stop loss, then you watch it flow. By the time a price action will get to a certain level and you see that level there is a support there or a resistance there, depends on where the direction of the flow at that point. If it's a bullish market, by the time you see that there's a rejection, another rejection, what is telling you? It's telling you that it's telling you that in the case of bullish trend, it's telling you that sellers are there. There are orders there. So you just take your profit. Or when maybe you are busy, all you need to do when you enter, let's say for example, you enter from here, your target is supposed to be here because it's the next resistance point. This is the next resistance point. Don't be greedy. The next resistance point without any trouble of price action getting here. It will get here, then you take your profit immediately. So guys, share this video, like and comment. If you have anything that you want us to discuss, drop it at the comment section. I will see you again next time in the next video. You guys should remain blessed, and I hope next week we even